Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and the optimism around the world markets continues, but there are a few straws in the wind flying around which should be monitored, especially the COVID updates. But first, what the US markets did in Friday's session, pretty decent actually, record-setting session of sorts, and the futures as we see are flattish in the session today. So the cues are mixed, even though we did very well on Friday. We haven't quite really done or are doing as well for the Asian screen today. But before I get to Asia, a couple of other charts that I should bring to your notice. One, as a result of what the US markets did on Friday and the optimism that we've seen off late, the global equities market capitalization has topped the 100 trillion mark. It could have happened only in 2020, I reckon, but we are at $100 trillion for the global stocks market capitalization. It's a big milestone which has been topped. Just again, a sign of the optimism that is there around the world on the equities side. And what is also adding a little bit to the mood in the session is the dollar index, right? Now, if you just look at what the dollar index has done, and typically a peaking dollar index signals a start of a turn. This is a dollar index which is dipping and continues to slide lower. So I think, if I'm not wrong, the dollar index is now trading at 31-month lows, which only adds fuel to the Indian equity side, so to say. So just keep that at the back of your mind. However, as I said, Asia and the SGX Nifty don't quite give the kind of optimism that a bull would have wanted this morning. So I think most of the Asian markets, but for maybe ASX, which was in the green, most of the other Asian indices are trading fairly flat to maybe marginally lower. And there's, on your screen, cost HSI is down about 1.5%. But again, that's an outlier, by the way. Not the other markets are not trading as low, I must say. Kospi is down, but not really like 1.5%. ASX in the green, as I said. Straits Times marginally flat, marginally in the red. And the SGX Nifty, the last time I had checked on the website, was trading about 0.4% lower. So I guess we between flattish to marginally lower, about 0.5%. I think that's the range. Yeah, 0.32% currently. So that's how we are likely to start off. Now, what is the trade setup looking like? We've had 5 straight weekly gains, and the markets are trading. Our markets too are trading at new record levels. And the market-wide advanced decline ratio still favors a bullish stance. I would doubt that people would want to take a bearish stance right now, because even if the Nifty is flattish, the market breadth has stayed positive on each of the last 4 or 5 sessions. So therefore, the market breadth is positive. We're seeing metals, real estate showing continued optimism in the economy opening up theme. Remember, India is different than the rest of the world. You have to bear that in mind. Yes, we have cases rising in Delhi, we have cases rising in certain areas of Gujarat, etc. But overall, compared to the world, the Indian cases are actually coming off. The active cases dipped below the 4 lakh mark. So India is kind of charting a slightly different course on the COVID front, and that might just keep the broader markets active because the economy opening up thing stays. And again, like I said, the market-wide advanced decline ratio is positive. The other part is the response to specific companies and news, right? Burger King IPO is testimony to the retail HNI exuberance in the market. Just look at those subscription numbers as of Friday evening. I mean, the overall subscription 156 times, QIB 86 times, HNI 354 times, retail 68 times. It just shows the optimism that is there for something that is available at optically a half decent price. So Burger King certainly out there, and it kind of shows the, as I said, the risk appetite. The last piece that I want to say on the trade setup before I move to specific stocks is to watch out for banking. Now, Dr. C.K. Narayan, he writes for BloombergQuint now, and amongst other things, this story that he gave out in Friday speaks about this Nifty Bank chart. Viewers, I just want you to see this point that has been mentioned there, the fresh upward thrust that the Bank Nifty is given in Friday's session. Now, if you look at that in technical parlance, there was a channel that was formed for the last couple of months, and I think yesterday, or on Friday's session, excuse me, the Bank Nifty, because of the late surge, has given a fresh upward thrust, which in technical parlance means that there could be upsides here. Now, I'm not saying there will be. I'm not saying go out and buy the Nifty Bank. But if you read Dr. C.K. Narayan's piece on our website, he'll probably give you an idea or two about how to go out and trade this market. Mind you, ICICI Bank could well be one key catalyst for this up move in the bank Nifty today. And the RBI policy also was. ICICI Bank had their analyst meet, and post the analyst meet, most brokerages have raised the target price on ICICI Bank. So one stock doesn't take the bank Nifty higher, but it's a large heavyweight component. And if that moves up, it might just improve the sentiment on the Nifty Bank, and that might just take the overall Nifty Bank higher. So do watch out for Nifty Bank still. I think Friday's move post the policy, which was a positive surprise for the bank Nifty and ICICI Bank, and the overall sentiment is just probably positive. Yeah, watch out for the stock. This could well turn out to be one key stock of the session today. Speaking of stocks, what are the stocks that one should watch out for? So aside of ICICI Bank, which was one that we highlighted right now, I'll watch out for ONGC. Remember, oil and gas stocks and ONGC in particular have had a really good run in the last few days, so you have to be mindful of that. But OVL came out with an announcement, ONGC Videsh, which is the subsidiary. They made a significant strike of oil in Colombia. OVL is the operator in the block with a 70% stake, and they should be positive. Yes, oil is not on the boil, but a fresh discovery always is positive. But as I said, keep in mind, ONGC has had a bit of a run, so you have to be mindful of that. Tata Chemicals is the other stock, which again has had a bit of a run, but the news flow continues to be positive on the promoter buying thing. So Tata Sons bought another 25.7 lakh shares, which is about 1% at 471 in Friday's session. The stock gained another 8% in Friday's session. It's now had 12 straight days of a run. The stock has had a massive uptick, Tata Chemicals, in the last fortnight, and you have to be mindful of that. Yes, the promoter is interested in continuous buying is there, but just look at that uptick in Tata Chemicals in the last 15 days, and it tells you a story. It was sub 350. It is now at 500. That's a 50% uptick in 12 trading sessions. So again, I'm not an expert on whether Tata Chemicals is worth buying or no. Our experts who come on stocks to watch will be able to tell you better. But keep an eye out for this one because of the promoter interest, but also be mindful of the fact that it's had a bit of a run-up. Vardhman Textiles is the other one, but in the promoter group bought some shares, additional shares at 901 rupees in Friday's session. So do watch out for Vardhman Textiles as well. Could be an interesting one. NMDC, known story, yes, but I just want to highlight that the Donimalai iron ore lease has been opened up after or extended after a 2-year suspension while the news came out. But it's a stock that could be active in today's session too. So you have to be mindful of NMDC. So be careful. Watch out for that too. And last but not the least, viewers, I just want to spend a minute on an ICICI report that ICICI Securities report that came out. They have said that come January, there could be possible or probable AMFI recategorization. This is as per the note, as I said. And the stocks that have a given here are the ones that ICICI Security believes have a very high probability of the changes. So they believe that there is a very high probability that Yes Bank, Adani Enterprises, PI, and HAL, Hindustan Aeronautics, might be get classified as large cap from the current mid cap categorization, and therefore the resultant flows will come in from mutual funds. So keep that in mind. And large cap to mid cap, they believe all of these 4 stocks could well get categorized as large caps to mid caps, and therefore there could be subsequent outflows. Of course, pure mid cap funds might have to buy them too. So there the jury is still divided, but essentially the quantum of large cap funds is much higher, and therefore there could be selling in these 4, there could be buying in these. Now keep in mind, we are only on the 7th of December. This categorization happens or gets notified first week of January. So there's one whole month between now and then, and therefore these things could change. But you could well do with keeping an eye out on these stocks over the course of the next few days. Closer to time, maybe 25th December or thereabouts, is when the certainty increases, and therefore the markets might start pricing in it, and that smart money might start trading these stocks. So you have to be mindful of that too. Lots of things to watch out for. I dare say watch out for the Bank Nifty and ICICI Bank in particular for the session today, but some of the others that I highlighted are also important ones to watch out. Thanks so much for tuning in. Have a profitable day and a great week ahead.